The broadcast is now starting. All attendees are in listen-only mode.
Hi, this is Tom Lane, DM2 Software's Vice President of Marketing and Sales. I'd like to welcome everybody to today's What's New in 2013 2.0 release. Before I introduce today's presenters, I'd like to go over a few housekeeping items. Because of the number of attendees we have on today's webinar, everyone's phones will stay on mute. If you have any questions during the webinar, please enter them into the questions window that you see in the lower right of your screen. We'll try to answer everyone's questions at the end of the webinar. If we're unable to get to your question, we'll follow up with you individually via email. Today's webinar is being recorded. As soon as the recording is available, we'll post it on our customer content page of our website as well as our YouTube channel. And I'll send everybody a message to let them know when they're available to be viewed and downloaded. On that note, I'd like to introduce today's presenters. We have with us Chris Lemonier, our Vice President of Development, and Rob Pierce, our Vice President of Professional Services. And they're going to give you an overview of what's new in version 2013 2.0. So take it away, guys.
Thanks, Tom. I really appreciate that. Good morning, afternoon, evening to all you guys that are listening to it, or listening to us. And go ahead, Rob. I was saying good morning as well. So our goal today is to kind of walk you through some enhancements we put into version, what we call v2013 or version 2013, just for people that are used to our older naming scheme, maybe not familiar with this. Sage has moved from 4.4 type, 4.3, 4.4, 4.5 type naming schemes. When it went to 5.0, they decided to start using years as the convention. Of course, controversial, but that's what they're doing. And at this point, we're running on the v2013 platform. We've had an initial release on that many months ago, and this is a follow-up with the addition of new features to the software. But first, one of the things I wanted to do was just to quickly go over some things about 2013, because 2013 is a big release for us. We rewrote the entire software to accomplish a number of goals. We know that our customers are getting bigger and bigger in transaction flows and user counts, so we wanted to re-engineer the software that would be able to scale to larger transaction counts, larger user counts. We wanted to put some technology in place to make upgrades much more straightforward and much easier to do, and lower that total cost of ownership. That was a big pain point that we're aware of, and we're trying everything we can, including this rewrite to what we call framework, to make that more effective. We know that a lot of you have custom, and we're looking at options and ways to get faster and less expensive custom programming. This framework technology enables that. I'm not going to go into detail on what this is. We do have some webinars that you can view from our website that explain this in much more detail. We want to get our timing of our releases much closer to the Sage releases. So as Sage comes out with new software, traditionally we've been a year to two behind them. We are working on accelerating that so we can release much closer to Sage's general releases on the platform and provide some tools for more in-user customization capability. A lot of you guys now have IT type of skill sets, either departments or contractors, and this system will allow for more flexibility in your ability to change screens or add workflows to the system. So in general, some of the benefits that come out of framework are things like system stability. We talked about index files and write once, use plenty. Those are technical terms, but they're really the whole system is more stable, less data corruption, those kinds of issues. The faster development cycle, both for custom and pure development, adding new features and new technologies, as well as that lower total cost of ownership during an upgrade cycle. Better access to customization either by you guys as the end users or by us, because no two companies run their businesses the same. I mean, that's pretty, almost all of our customers have some tweak to the system. And then finally, third-party partner integration, an open API. DM2 is, partnering is in our DNA. We have over 100 different partners in different industries and different areas, including major oils, including truck systems, all kinds of things, as well as other Sage master developers like DM2. So we're doing things to make that integration easier, simpler in 2013 to allow those upgrades and things to be more smooth and seamless. So in general, these are the framework benefits and the framework technologies we've been working on. We've been doing this for 5 years. We completed it with 2013 across all of our modules and the whole product. So we're very excited about that. And like I said, if you want more details, you can go back and view webinars on our site that talk about this in more excruciating levels of technical talk. Finally, this technology allowed us to introduce Microsoft SQL as a new platform. We've, of course, had Microsoft SQL Server as an option for our StoreLink, our DM2 SQL Intelligence, and our Sage CRM systems. But with 2013, we've now added the option of having a SQL Server available to you on the Sage ERP. So some people will ask, well, are these in the field? Yes, they're in the field. They're in operation every day with our customer base. We're seeing great benefits from it, great performance. Of course, the standard default database is available, but we're very, very excited about this. And this was a major part of our framework initiative, was to get to a native SQL Server configuration. So we're here today to talk about the new feature release for 2013, v2013.2. When we completed the framework work and we added some new functionality to the system for 2013, once that was complete and that big effort was done, we stepped back and said, what are we hearing from the customer base? Where are some of the pain points that even up through the most current release, even up through 2013, people are experiencing? And one of the things we discovered was we just weren't doing some things with fees and with freight and with common carrier relationships really effectively. And what we've learned is that the jobberships and the petroleum distributors, as they've gotten larger, as you guys have gotten larger and more expansive across states, dealing with more carrier options, some of you operate your own carrier as a sub-company or another company of your business, that was creating a lot of complications in the software. As well as, petroleum companies are, in a way, logistics companies. And anything we can do to help with improving those logistics or making those things easier and flow into the software, we think is important. So we really focused in those areas of the common carrier relationship, the freight relationships, making that system easier. You could do it, but it was complex and required a lot of some manual efforts, and we really tried to improve that with 2013. So I hope that stands out to you as we go through this. So the first feature I want to introduce you to is freight-only invoicing for common carrier deliveries. So the purpose of the enhancements is to add the ability to create a freight-only bill of lading for products at a zero cost. The system normally won't allow you to enter an item into it with a zero cost amount. But in certain cases where you're dealing with common carriers, you're only going to be actually paying the freight transport portion of it. So we've modified the system that when the gallons are entered, they trigger the freight calculation. So you receive an invoice for X gallons for X product with a price that equals the freight only, so that you can actually pay that for the common carriers. And because many common carriers use unique products, it also includes the addition of a default fuel type, includes fuel types and bill of lading, and we made some changes in inventory to make this more usable. It actually applies beyond common carrier type deliveries when distributing blends such as mid-grade, various bios, or ethanol blends.
Yeah, and this could also be if you're providing carrier services for other people, it's a way for you to record the freight activity for your own internal transport department. So it can be used for external carriers that you're billing out, or you're providing the carrier services yourself.
So down in the weeds, what we've done is we've added to the Petrolink options for inventory a new fuel type field. So from there you can actually drop it down and make different selections of the fuel type, as well as a checkbox for the bill of lading zero cost. So this will allow this item to be processed on the bill of lading that has no cost associated with it. So when you're entering the receipt portion of a bill of lading, and what I'm showing here is the new bill of lading in 2013, you can select items to actually be processed that do not have a cost as long as that checkbox is checked. As a safety measure, if that box isn't checked, we do pop the standard message to let you know that you haven't entered a cost. So for items that aren't really related to this, you can still have the safety net of making sure you're not processing bill of ladings around with zero costs and messing with your gross margins. So when you enter the distribution portion of the bill of lading, you can select those items that have zero cost also, just like the header portion or the receipt portion. And there'll not be any price because it's zero cost, not have any price for sale or fuel taxes associated with the item. When selecting on that screen, there's a freight button. When you select the freight button, it displays a screen that has the freight calculations for the gallon being distributed. So you can still see that detail through the freight screen itself on the bill of lading, even though there's no cost associated with it. And then, of course, that then flows through the bill of lading journal with no price or cost or extended cost, and the bill of lading fuel tax journal shows no fuel taxes. So it still flows through the system like you would expect, and all the reports and the updates and things show what you would expect to see. Next. So the freight register does display the appropriate freight amounts and surcharges, but the inventory register displays the zero cost, and then the freight will be assigned if post-freight is out, the cost of goods sold is unchecked. So there's a little bit of an option there. But basically, it works exactly the way you'd expect. You're creating an invoice or bill of lading process that has no cost associated with it, and that flows through the entire system properly. Then on the gross profit report, you get a zero price cost item plus the freight and surcharges, and the invoice shows the freight and freight surcharges based on the settings that you configure for freight and surcharges, and we'll actually be showing that a little bit later. But so you still get the breakouts, you still get the freight detail on the invoice and in the gross profit, but you just don't get those costs and pricing, and all that flows through the system as you'd expect.
So for the product, it's not my product. Therefore, I don't really want to recognize a cost or a price. The value I'm adding is I'm hauling it for someone else. So I'm going to bill someone for the freight, and there's a cost incurred for that. So I'm recognizing the cost and revenue around the hauling services, and that goes off to my transport division or my transport company.
So the next thing is common carrier, and I'm going to say this word wrong, ancillary fees. So this is the ability to add demurrage charges or split load fees, pump off charges to a common carrier bill of lading. The charges are in addition to their freight and other surcharges, and then when you receive a billing from a common carrier, these charges are available via a freight button in our accounts payable. So this allows you to actually then have those additional charges that are coming in from the common carrier process through your normal AP process method.
And these are available if it's my product and I have a common carrier doing the hauling for me, I could record these ancillary charges. Or if I'm the carrier hauling for someone else, we could add the charges on as well to pass on to the customer we're hauling for.
So the vendor maintenance now provides an ancillary charge in AP invoice entry. So for the vendor, in this case, an in-house transport, you can actually go in and check off that it's going to have these ancillary charges. It allows you to have some granular control over which vendors have these and which don't. If it's checked and there are applicable charges, these charges will appear in AP invoice data entry when you select a freight button. Go ahead. In accounts receivable miscellaneous item maintenance, there's a new ancillary charges and AP invoice option. So if checked and there are applicable ancillary charges, these charges will appear in the AP invoice data entry. So you need to have both the vendor set to do ancillary fees for the carrier and the miscellaneous charge that you're going to use for the fee has to be checked on. So both of those are kind of a safety measure, say this item is one that flows through accounts payable. So when you're entering a bill of lading, the charges will be added through the freight button. We've got it highlighted there on the top screen. So and it shows on the distribution section there at the bottom. And then in the bottom left, you get a new button that is to actually add the carrier charge items to this particular distribution. So when you select that, you get a list of those miscellaneous items that have been turned on for ancillary charges. You can pull those, select them that you want, and those will be pulled into the up into the distribution, into the bill of lading, will appear as additional charges on it when it comes to account, and then be selectable for accounts payable. So go to the next one. I think that's a repeat. Oh no. So in this case, I selected demurrage. The item appears on the freight detail screen. The rate out and in can be modified, and multiple charges can be added. So we went ahead and pulled that demurrage item, inventory or miscellaneous item over as a fee, and then we can go in and actually on this screen change the rate out and in if it doesn't match what we want to charge in this particular case. And they can be two different rates. So you can charge a different rate to what's actually going to be charged in an invoice versus the rate charged when it comes through accounts payable. And of course, you can have more than one charge.
Yeah, you can think of a rate in as the cost that you're incurring and a rate out as the price that you're passing on to your customer. So you have the ability to not pass it on to the customer, pass it on at cost, or put a markup on it.
So then the ancillary charges are displayed on the SO invoice based on standard functionality, similar to how the minimum gallon charges are added. So there's some options for how that's configured and displayed. Then the charges flow through the updates into sales order and over into accounts payable. If you pull up the common carrier and they have ancillary charges turned on, then you can select a new button that's been added called Freight. It's highlighted here. That button will then allow you to pull up bill of ladings just like normal when you're processing a bill of lading, and select ones that have those freight items on it that are then going to be paid through accounts payable. And it will automatically create the line detail and all the things you need to actually process that, just like you would process freight, process the bill of lading products on those particular invoices. These are just additional fees. So the next item is an interesting one. DM2 has a field inside of the customer AR maintenance that is called a customer type. It's in technical terms called a non-validated text-only field, which essentially means you can key anything in there you want, and it's not validated against anything. So if you wanted to use it to identify regions a customer's in or a particular product, maybe they were card locked versus a heating oil customer, a lot of our customers use it that way. And so that creates a couple of things. One is that you can use it for some analytics, but it's not validated, so there can be, people are keying that in, may not get it right, and may not fill it in the same way or consistently, so you can end up with some kind of weird reporting. The other is that we really want to see that kind of reflected in the financials. A lot of people want to see that flow up into the general ledger that way. So we've tried to address both issues.
Yeah, I think this is a sleeper feature I'm really excited about. From the non-financial operational reporting, the business intelligence side, for years, folks have kind of wanted to look at two perspectives. I want to look inside my company, see how we're doing by people, by resources, by warehouse. That's a real common one. But on the financial analytics, all we really had was warehouse substitution. So I could look at things kind of from an internal perspective. Now what this allows us to do is on the financial package, look at it from an external perspective. I could see how we're doing out in particular customer segments. So it not only does it expand the usefulness of the financial package, but it also now allows us to align the operational metrics with the financial metrics.
So in general, the purpose of this was to add that segment substitution based on customer type field and customer maintenance. So what we did was, we know not everybody would necessarily want to be able to do this. We try very hard at DM2, and we like to not sort of deprecate things you're already doing. So if you're using the field in a specific way for your business, you don't have to enable this, but if you decide you want to, there's a new field in the Petroleum option. It's called Enable Customer Type Segment Substitution. When you check it, it will then enable a segment substitution drop-down right below it, and will begin validating the customer type in AR customer maintenance and customer ship-to maintenance. So it'll begin requiring that field be a validated field, which just means there's a table of these that it checks against to make sure they're legitimate. And then the post to field in the customer type maintenance becomes visible for the general ledger. So that drop down allows you to list the segments as you've defined in the general ledger and choose which ones you want to select from. If you select a segment that's already being used, such as a warehouse substitution for AR or a warehouse substitution or an AR sales substitution, you'll get a message that warns you about that. So you'll need to have a segment for this purpose when defining that GL. So then customer type maintenance, which is where you go in and define those validated customer fields, it enables a new field on there that allows you to select the general ledger code substitution that will be used. So you can go in here and pick them. It looks up off the GL segments, and then you just pick that and then decide how you want to organize your customers. So if you want to have them in regional areas, or if you want to have them in some sort of a product line like fuels versus lubes, however you want to do it. And it really allows you to sort of take your analytics and your financials, as Rob said, and really align those together. So it's a very exciting feature, and it's something that people have been working around for quite some time.
Yeah, I think today the common categorization is business lines. So I'm looking at my transport business versus my tank wagon business. So this allows you to go one level deeper. Within transport, maybe I want to look at my dealer customer types versus my non-branded customer types. Or over in tank wagon, maybe I want to look at construction business versus residential versus your other agricultural. So it just allows at the financial, we've always had that in the non-financial, but now you could also do it on your financial packages for P&Ls and those individual deeper granularities.
So specific performance characteristics in AR main customer maintenance and ship to maintenance customer types. So both the AR and the ship to, if there's a customer type segment that's turned on, then within both maintenance and within ship to, you actually have that field that you can go in the validated type field. If an invoice is being created that has both a customer and a ship to, the system will first see if there's a valid customer type in the ship to, and if so, it will use that. If there's not, it will fall back to the customer type itself. So you can actually then use sort of segment substitution and typing even a level deeper than just the account, but the account plus their ship to location and where the product's going.
Yeah, you might have a customer that actually has different business lines. One customer might be both an agricultural customer and a commercial customer. So you could set up separate ship-to codes for that distinction.
So then when you're in sales order and invoice entry, just like you'd expect, we'll display the appropriate sales and cost of goods sold numbers with that type substitution. It follows all the same rules, and you can use a combination of warehouses or customer types. So it's really another layer of flexibility in the system. You don't have to choose one or the other. You can really work with both. And we think it's a very exciting, like Rob said, kind of a sleeper thing. It looks like a little line on a list of enhancements, but in reality, it's got a lot of implications for how the system works. So, sales order, invoice, date and time, override, and bill of entry. We made some changes to bill of lading entry several versions ago to add the ability to do FIFO, LIFO, lot, serial kind of costing in the system. And that necessitated joining the two update processes, both sales order invoice and bill of lading, together into a single thing we call the bill of lading unified update. That's had a lot of benefits. We've been performance tweaking that. We're really pleased with the whole thing, but we've also found that we had some gaps and things that we needed to do, and one of them was the ability to override the date and time from within bill of lading entry that would allow you to use the actual pickup dates for pricing and dating the distribution on the sales order. So
yeah, a good business case would be, I know that prices are trending up, so perhaps I want to take the trucks over and fill up tonight at tonight's prices, but deliver and sell it tomorrow at tomorrow's prices. So that's a great example of how this feature could be used.
Exactly. Okay. So when you're putting the bill of lading entry in when you're in the distribution tab at the bottom. So this is where you're distributing the sales orders and distributing the inventory. We've added a new button that just says DT. It's date time. So if you've selected an S-type distribution, that's a sales order type distribution, which is where this is applicable, then you can click that DT button, and it will pop a dialog for you that allows you then to see the sales order number. You can then enter a ship date. We call it a ship date because that's the field in invoicing. It's called ship date, but it's really the delivery date that you want it priced off of. And then the effective time. So it has both the date and time are used together to figure out what that price is. You can also select to apply that to the order date. So this is really about the invoice, but can also be the order. So the most important thing is to realize that this is going to change the price that's on the sales order invoice, change the date that's used to calculate it, but it gives you some really granular control over each one of those sales order invoices and what should be the date time used for the price calculation in the tables. So once a new ship date and effective time have been accepted and off that screen, the bill of lading will go through a recalculation process for the sales order that you've selected, and then we'll update that. So I've got a little picture here of the price table maintenance. So it would actually go through with that new date and time and figure out what the price should be and then update the distribution so you could see it. Then that will flow through the invoice, flow through the order if you selected it, and allow that to go up. We found that this is to be a significant issue with timing, for when you actually process those deliveries and all that. And we understood that it was, we had, with the new changes with the unified update, that we had taken away some capability you guys had, and that this is really to put that back. So DM2 has had for a while the ability to add automated fees. And what we've been wanting to do is extend that to allow for more granularity by adding warehouses so that you could actually have warehouse as a factor in whether fees are applied. So we've had the Petroleum fuel tax fee assessment, and you could go in and actually set up those fees, and then what would happen is those fees will be applied to each order for the customer, but wasn't sensitive to the warehouse that it was sourced from. And we got some feedback that said that, well, because of the size we are now, because of the bigger jobbers and the more areas and the more warehouses, the larger operations, the more states, we need to be able to actually allocate those fields by warehouse. And by the way, while you're in there, we could really use a cents per gallon calculation as a way to actually figure out what the fee should be.
This really closes a gap. Previously, you kind of had two choices to pass on a charge to a customer. It's, I set up a new product which has warehouse segment substitution capabilities, or I set up a tax that has great cents per gallon and percentage capabilities, but it doesn't do warehouse substitution.
Entry, if you have a miscellaneous item or tied to a warehouse, as indicated in your setup, then that warehouse is used, the miscellaneous item will automatically appear. So if when your sales order goes in and it gets its warehouse, its fees will be sourced from that particular warehouse. So
I just want to give you guys the heads up. We're about halfway in. We got about a half hour left. Just to give you a heads up. Thanks.
Okay, sounds good. The automated delivery fees by warehouse miscellaneous item maintenance, we added a new calculation drop-down. There's a couple of options in there. One is fixed. If you select fixed, the system will act the same as prior to the enhancement, where the standard unit price cost of that miscellaneous item will be used as the fee. We also have a cents per gallon, and if you select that, that's new. If you select that, it will be based on the total gallons of the IM item shipping on the invoice multiplied by the rate stored in the standard unit price field. Cost of goods sold, if applicable, will be calculated using the same formula, but with the standard unit cost. So now you can have a quantity-sensitive rate or fee that's being charged, not only by warehouse but also by that inventory item. And then you can go in and actually make that miscellaneous item post by warehouse, allowing the GL segment substitution based on the warehouse associated with each order. So as the order grabs its warehouse, its fee will flow to that appropriate GL segment, just like you'd expect.
Yeah, that's a nice feature, because previously you'd have to set up that same miscellaneous item multiple times for every warehouse, and this remedies that.
Good point. So we have our fuel tax maintenance, petroleum automated fuel or Petrolink fuel tax automation. We have added a new column called Apply to Warehouse and a binoculars button for accessing a new screen. You can see in the bottom right that allows you then to select either a warehouse or a range of warehouses. So if you've got a group of warehouses you want to include in this, you don't have to set them individually, but you can actually just choose that range. During sales order and or invoice entry, the system will determine if the header warehouse field meets that selection criteria defined in the Petrolink fee assessment, and then it'll look at that customer, that ship to location, or if it's a global fee, and make sure all of those things get applied. So it gives you some more control, more granularity, and being able to select how those fees get applied and when they get applied. So next, of course, we've been talking about all these surcharges and everything, but we also wanted to add some ability to control how those things get displayed on invoices. You know, we have the ability with freight lines to roll them up and do different things, but we found that freight surcharges needed to be the same way. So the purpose of this change is to display the freight surcharge as a separate line item on invoices. Jobbers who have their own transport companies and haul fuels, common carriers, have the option at the customer or ship to level to display the freight surcharge as a separate line on the SO invoices. So if you have a requirement coming in from your customer that I have to display it separately, I can, or if you want to have some control over how it gets displayed, you'll have that too. So we added a new flag at the customer ship to level to manage that display, and the addition of a new item called freight surcharge that's going to look a whole lot like the freight item, but is broken out so you can apply those surcharges to a different item than just freight. So you need to add a new item called FRT surcharge, freight surcharge. It's the same as setting up freight. So if you're familiar with how freight works, you create this inventory item that's freight and everything runs off of that. FRT surcharge or freight surcharge works the same way. So the freight surcharges that you're charging will actually then flow to that part rather than the freight item. And then you can use that to manage how they're displayed on the invoices. So you can have freight and freight surcharges actually displayed different ways. So the product, the freight, and the surcharges can all be displayed in different methods depending on what your needs are by customer. So if you go into accounts receivable customer maintenance under the Petrolink options, there's a FRT surcharge roll-up. You have three options. You can display it as a separate line, which means the surcharge will appear on the invoice as a separate line item following the freight line item. So right now you get product, and then you have freight, and then that would have surcharges. This will now print the product, freight, and then you get the freight surcharge as a separate line. The roll up into freight, what will happen is the surcharge will actually be rolled up into the freight amount. So even though on the order invoice there's a separate surcharge line with a separate GL, when it's presented on the invoice it'll actually be just one entry. And then there's a roll up into product, which is just like the freight, but would actually put it up into the product itself. So you can control your freight and that freight surcharge differently depending on what your presentation needs are. So for example, we have an invoice here that has the freight actually exploded out on the left, the freight surcharge, and the one on the right has it rolled up into the freight itself. So lots of different options, lots of different granularity, but we wanted to add that capability. With those surcharge expansions and the things that we're doing, we really wanted to give you some more granular control over that. And we know that each customer has different needs. Sometimes a Walmart is going to have a different needs than Chris's auto supply. So we wanted to provide that for you. So we also, in the line of freight surcharges, have expanded some of its capability. We've had this for a while, but it's complex to set up, and you were having to do a lot of things to kind of rig the system to make it do what you needed. So we wanted to make a few changes to that. What we did was expand our freight surcharge to feature a freight out. Traditionally, the freight surcharges just had a rate, so what you charge to the customer and what you may pay in accounts payable actually might be two different amounts, but we were forcing you into a single rate. We've now got two different rates, a rate out and a rate in. Rate out for the customer, rate in, so think about it like customer and my charges. So there's an opportunity to make that what you need it to be. If you need to mark it up or change it to what you'll actually be paying, you can do that. We also added the capability to actually configure these surcharges by carrier, by region or state, and surcharges by customer shipped to. So now you can actually easily configure the system by carrier to say when we deliver to these regions in these states, there's some additional surcharges, or if we deliver to these customers and ship to, there's some additional surcharges. You can do it before, but you kind of had to fake it out to get the right thing, and people had to know what they were doing. This really adds that capability in the system.
Yeah, we have customers that are doing business in larger geographies, 29 to 35 states. And the same carrier may have different rates depending on which geographic region or state the business is being conducted in. So this just facilitates the jobbers that are doing business in larger territories.
So we added the new freight out surcharge within the freight surcharge maintenance screens. We've added a states button and a new customer screen to allow you to select some customer specific information. So you can see we now have that column that I've got highlighted there that shows you that the surcharge out that you're charging the customer to allow that rate variance, and two new buttons, state and then customer. So you can specify that freight in and out by carrier, by state, or by carrier, by customer. On the left there, you can see that you're choosing some state codes, and the system will automatically choose the appropriate freight surcharge based on what state this is in or what customer you're dealing with. I think this is really nice because some of the complaints we've got in the past, people have had to configure weird pickup configurations, or they have to configure weird carrier configurations to handle all these different permutations of what the surcharges might be. So we think this is really a nice enhancement, and taken together with the others really makes this a lot more capable, and the freight system a lot more capable. And like we've been saying, logistics is a big part of your business. So being able to handle more and more of that is a competitive advantage for us, but also a competitive advantage for you in being able to manage your business. So during the bill of lading entry process, you have the ability to view the correct surcharges within the freight screen, so it's not hidden from you. You can see that configuration, and then of course it flows down through the gross profit journal. Invoices all reflect the carrier state and customer surcharges. So exactly how you'd expect this to work and then flow into the general ledger, it does. So as most of you know, we have been a flagship partner for DTN. DTN does a lot of things where we pull in pricing, we pull in bill of ladings, we pull in accounts payable, we pull in EFT, credit cards, all those things. And I would say just about everybody on this phone, if not everyone, owns one of those modules. So one of the requests that we were getting was, DTN has a portal to allow for invoices that have been generated inside the customer's ERP system to then be posted to their site to either be viewed or then downloaded into another system. So think about it like an electronic data interchange, or EDI method, where you are uploading invoices and then DTN is making this available for other people to download to pay. One of the big advantages of that kind of thing, and is the focus of our Outbox technology, the focus of our website pipeline technology, is the sooner that you can get an invoice into someone's hand, the sooner you can get that clock ticking on getting that payment. So it really benefits the cash flow if you can do whatever you can do to get that invoice in front of them, get it processed, and get that money back.
Yeah, so speed of cash flow is certainly one of the benefits of this. But beyond that, to get some of the large contracts with the larger customers, they're making it a requirement. If you can't give us invoices in this kind of electronic exchange, we're not going to do business with you. So it's becoming really popular.
Absolutely. So they'll allow DTN host this portal. It's allow you to export your customer invoices to DTN. We wanted to provide, of course, some background information. So after that export's been completed, you can get an audit log to make sure those invoices were sent. And we do tag the invoices as sent so that the open AR reflects which invoice has been uploaded and which have not. So you do have some ways of knowing whether those invoices went, and it's not like a black hole where you just send it to DTN and you don't know what happened. So we're adding the ability to export those SO invoices in a format DTN can import. We create that audit log, and we also added the ability to reprint historical exports. So if there's some sort of issue or you have an invoice change or you're just coming up on the system, you can export SO invoices in a format that DTN can read from your historical invoices. So in the DTN interface options, we've added a couple new fields. One is a login for the DTN invoice export and a password for the DTN invoice export. You, of course, will have to have the relationship with DTN and have the capability activated on your DTN account to be able to do this. But once you do, they'll give you that login and password that you'll need for this feature. Then in AR customer maintenance, there is a DTN site code, which is the way DTN identifies a particular customer. So each one of your customers will have a site code that will need to be keyed in that DTN would supply. And then there's an effective date. And the effective date is really just a cutoff point to say invoices equal to or greater than that date should be selected for exporting. So it's a way to limit the number of invoices that are going up, or say I don't want to pull every invoice for an account and those kind of things. So it's a way of sort of granularly controlling which ones go. After the SO sales journal update routine is completed, so after you've done your entries or however you're getting those invoices in and you've updated the journal, there's an option to select export invoices to DTN. It's under the Petroleum DTN interface menu, and it'll open a screen that looks like this that gives you some selection criteria, the paths that you're going to export the data to, and those kind of things. Kind of looks like a report. Once you select the print button, it will generate the files, the CSV files that DTN needs in the layout that they expect. And then you have a preview, so you can kind of see what's being transmitted before you actually do it. So you can do your select and do a preview and see what's going to go before you actually transmit it. And then this works the same way when creating an order through bill of lading one steps or sales order dispatch manager, which, by the way, SODM feature of 2013. Be sure you check out it on the webinar, on an earlier webinar, as well as standard SO price processing. So finally, we're going to talk about supplier contracts.
Just want to let you guys know we got about 15 minutes left.
Okay, thank you, Tom. So supplier contracts, as part of doing business, jobbers will negotiate contracts. You guys will negotiate contracts with your suppliers, which allow the jobber to be more competitive in a particular market. And those contracts are typically for a fixed amount of gallons, for a time range, and have special fixed forward or indexed pricing associated with them. So we added a new feature to our system in bill of lading that will manage those supplier relationships. The feature functions very similarly to how to our customer contract price. So if you're extending a contract to your customer, we have a feature for that, but works on the purchasing side of the transactions. So what you're seeing here is the supplier contract maintenance screen. You can see that you put a supplier number in, and then a contract number and a start and end date. You have a setup date and then the total contract quantity. But because you may have multiple pin drops running off of that contract, you then go in and add the pins for the different pickup points. So in this case, pin 1123 at INTR, for whatever item code it is, the quantity that's on the contract. And then you can specify, you have a couple of options. One is you can specify a price table to base that contract off of, so that will tie it into standard fuel tax or Petrolink price table maintenance and allow it to pull the cost from there, or you can put in a fixed cost if that's what you have. So the table cost can vary by date and time, and the fixed cost would just always be that cost. And then it has some other information, including what's on order, what's sold, and what's remaining. So when you're actually going into the bill of lading, we have highlighted here that PIN. You don't specify the contract, you specify the PIN. And so when the driver goes out and pulls from the rack and he enters the PIN, that's usually what comes back on the bill of lading. This is the thing you're going to key in here, and that will link this bill of lading back to those contracts, back to that PIN specifically. So you can't have multiple PINs running simultaneously. We think it's a big feature, and we're really excited about it. And if you're familiar, like I said, with customer price contracts, then this will be really soup for you. You'll understand it completely. So in recap, we talked a little bit at the beginning about our 2013 release, so I really want to emphasize you guys should go and look at that stuff. But here we talked about freight-only invoicing for common carriers. We talked about those ancillary fees that can be brought in, so a little bit of work there for really improving the common carrier relationship. We know that's a big thing. It's becoming bigger and bigger. Whether you are your own common carrier run as a separate company, whether you're providing common carrier services for someone else, or whether you're using common carriers yourself, we think these are value adds for that. The customer type segment substitution, like I said, from a reporting standpoint, DM2 is big on business intelligence. And of course, we are a financial package, so we want to do what we can to make reporting better, more robust, and then tying all that back to financials for you, which is a huge thing for our customer base, and it's a huge value add.
And all these requirements are coming from leading edge jobbers, and they're coming from the field. These aren't just ideas coming up behind closed doors. And if you look at kind of the theme behind here, it's securing supply at the best price. It's top line revenue growth with additional carrier services, fees, surcharges. It's deeper analytics into where we're really making money with customer types. It's just a really nice package of features that complement the growth that we keep hearing out in the field. We're growing our business. We need to grow our business. And this package really does a nice job of helping that mission.
So we also have the, thanks Rob, so we of course have the SO invoice date override that closes a gap we had in the system. Of course, more fees and additional surcharges, and but more specifically, more control over how those get applied. Like I said, these are really building on things that have already been in the system, but really making them work for the jobber. Those expanded freight surcharges, the new DT and AR invoice export. One of our big focuses is any opportunity to either A, be paperless, or B, speed up the cash cycle. We think it's great, and anything we can do there to strengthen that is wonderful. And then supplier contracts really closes the gap in the software, and we feel really strongly about it. So as I said at the very beginning, we're really focused on that supplier side, freight, common carriers, those kind of things that have been added in the software but really needed some refinements as well as some new capabilities. So these were just some of the new features introduced in 2013 too. There are a few others that we didn't have time to cover today, but we do encourage you to go and view our other webinars that are showing new features of v2013 and several in-depth deep dives. We've got a really robust YouTube channel that has a lot of webinar videos and things. You can access them from the DM2.com website. And really encourage you to go look. Go look at the v2013. If you're coming off an older version, like a 4.3, 4.4, 4.5, you really want to go look at those too. Look at the releases for 4.4, 4.5. Get that information, because there's hundreds and hundreds of features that have been added over those versions. And we're really excited about this. If you do want to upgrade, you can reach out to Elizabeth P. at DM2.com. Elizabeth runs our upgrade group, and she can help you with planning and scheduling and talk to you about it. Or go to DM2.com and select how may we help you. That will direct you to, there's some options there for applying for an upgrade. We are really signing customers up for 2013. We've got about 40 installed or in the pipeline. I always recommend that the sooner you can make the decision that you want to move forward to the new platform, the better, because it gives you more control over the timing. So you can say, I want it done in this time frame. I'd really like to have it here. I'd really like to have these options. this is my busy season, this is not my busy season. It gives you a lot more control than having to sort of squeeze it in where we can. And so we really encourage you to get signed up. Even if you're several months out from doing this, go ahead and get in the queue. All right, Tom, I'll turn it back to you.
Okay, thank you, gentlemen. Excellent job there. All right, I'd like to take this opportunity to just put a plug in for next month's webinar. We're holding a webinar with a new business partner of ours, Century Business Solutions. They are a credit card processing organization that has a completely integrated interface with Sage 100 and therefore with our DM2 Petroleum Insights system. And they have been very aggressive in the marketplace and offer some really good rates. They offer full PCI and EMV compliance, and one of their claims to fame is they have very, very fast same-day settlement time on transactions. So we wanted to introduce them to you next month. So we'll be holding that webinar on Thursday, July 16th at 11:30 Pacific, 2:30 Eastern Time. And when I send out the information to let you know that this webinar recording is available on our YouTube channel, I'll also include a link for you to register for this webinar. So we can open it up for questions and answers now. All right, we don't have any questions at the moment, so we'll give, I know there's a lot of information to digest, so we'll give everybody a minute to think of any questions they have. If we don't receive any questions, you can always, could you advance the slide, please?
We're on Q&A, Tom. Which slide would you like to go to?
Isn't there a final Q&A slide with the email address for follow-up questions?
We're on it. It must not be showing.
Yeah, I'm not seeing it on my screen. I'm still seeing the webinar invite. Anyway, as always, if you have any questions after the webinar, you can always contact us at sales@dm2.com, and we'll get the right people involved to get you answers to your questions there. We still don't have any questions, so I think that concludes today's webinar. I want to thank Rob and Chris for doing a really nice job of giving us an overview of the new features and tying them in with some of the business cases where you might, be able to use those and put those into practice in your business. And I'd like to thank everyone for attending today's webinar. We'll look forward to you joining us next month on the 16th. Thank you very much.
Thank you.
Thank you.